prices rose on Tuesday, with Brent holding near $30 per barrel. The ruble is likely to stay in the current trading range even despite worsening background. The news about additional output cuts proposed by Saudi Arabia and supported by the United Arab Emirates and Kuwait are sure to boost the market sentiment. Meanwhile, traders remain skeptical. On the one hand, market participants have been long waiting for production cuts. Yet traders still doubt that Riyadh will eventually cut its daily output by another 1 million barrels per day. Besides, the lack of oil storage capacities continues to weigh on oil prices. In addition, markets are worried about a second wave of the coronavirus outbreak. Recently, the number of infected people has surged in South Korea, China and Germany. Brent oil futures for June settled at $29.94 per barrel by mid-session. The nearest futures for American crude WTI were trading at $24.84 per barrel. Both benchmarks closed the session on Monday with around 2% losses. Investors are still concerned about the uncertainty in the energy market caused by a slump in fuel demand due to the COVID-19 outbreak. It might take a lot of time to fully restore the demand. In the short term, Brent futures contracts are expected to trade within the range of $28 and $32 per barrel. In best case scenario, Brent may advance to $35 per barrel in the mid-term. Otherwise, it may drop to as low as $25 per barrel. The Russian ruble is trading today amid moderately negative background. The ruble sell-offs were mainly caused by a situation on the energy market when Brent failed to hold above $30 per barrel. Besides, in the early session, the greenback strengthened against its major rivals. Still, the dollar-ruble pair slid to negative territory later in the day. The pair returned to the levels reached on Friday. As a result, the US dollar was trading at 73 rubles 45 kopecks. Notably, the pair's trading range has narrowed over the past 30 days to 72.5 to 74.6. The ruble benefits from the plans of the Russian Finance Ministry to increase the volume of daily foreign currency sales under the budget rule. The new case of COVID-19 registered in Wuhan raised worries about the second wave of the pandemic. However, the easing of quarantine measures provides support for the American currency. The dollar's growth may trigger a new round of sell-offs on the ruble, which means that the dollar-ruble pair is very likely to rise above the mark of 75 points.